Hi everyone, I hope you all safe and healthy with your family and friends. This video we are going to learn about 11th standard accountancy, unit 12, illustration sum number 4. Compute the cost of goods sold from the following informations. The informations are given below. Let's read. Opening stock 8,000 rupees, purchases 60,000 rupees, direct expenses 5,000, indirect expenses 6,000, closing stock 9,000. What they ask, we are going to find out the cost of goods sold. Okay, what is meant by cost of goods sold? Do you know what is the format of the trading account? On debit side of the trading accounts appears opening stock, purchases, direct expenses, right? And credit side of the trading accounts appears sales and closing stock, right? Okay, what is the meaning of stock and the goods? Stock and goods both are similar meaning. These both are same meaning? No, it has different meaning. What is meant by goods? That is purchases and sales both are called as goods. Okay. What is meant by stock? Listen, the remaining unsold goods are called as stock. So the stock of goods remaining unsold at the end of the previous year is the opening stock of the current year. Okay, that is called opening stock. Similarly, the goods remaining unsold at the end of the accounting period are known as closing stock. Are you clear now? What's the difference between goods and stock? Okay, take for an example, if you run the business, you have purchased some goods with the opening stock. Have you recalled the trading account? Have you recalled the format of the trading account? Let me explain. As per the format of the trading account, we already have previous year's unsold stock called as opening stock, right? And addition to that, we have purchased some goods. If we have purchases written, we have to subtract purchases written from the purchases and we get net purchases amount. Okay, then tell me what are the items are shown on the debit side of the trading account, that is opening stock, purchase, net purchases and direct expenses. What is meant by direct expenses? All the expenses are related to the purchases of goods and bringing the goods to the godown or business premises. Okay. After that, the cost of the manufacturing goods. Listen, what is meant by purchase direct expenses? What are the items or comes under direct expenses? There are carriage inwards, freight inwards, or carriage on purchases, wages, dock charges, octroi, import duty, royalty, coal, gas, fuel, and powers. These items are comes under direct expenses. Okay, and the cost of the manufacturing goods is shown on the debit side of the trading account. Okay, let me tell you what are the items comes under cost of the goods manufactured. For example, raw materials, coal, gas, fuel, water, power, factory rent, packaging, factory lighting, royalty on manufacturing goods, etc. or comes under the cost of goods manufactured. Okay, then we have to add all the expenses related to purchases of goods. Okay, which means opening stock, net purchases and direct expenses and cost of goods manufactured. Okay, and it is to be entered on debit side of the trading account. Okay, so we have to add it all the debit sided items of the trading account. Okay. Then let's go to credit side of the trading account. What are the items are shown or appears on the credit side of the trading account? Sales and closing stock, right? Okay. Take for example, now we have 2 lakhs rupees on debit side of the trading account. Okay, total amount of the debit side of the trading account is we have 2 lakh rupees. Take for example, from the two out of the 2 lakh value of worth of goods, from that we sold 1 lakh rupees value of goods sold. Okay, 1 lakh rupees worth of goods we sold. Okay, so from the current accounting period. Okay, remaining 1 lakh rupees unsold goods, we called it as the closing stock. Listen carefully. We have 2 lakh rupees on the debit side of the trading account. Okay, out of the 2 lakh rupees value of goods, from that we sold 1 lakh rupees value of goods. Okay, on the current accounting period. How much rupees we remaining in our hand? We remained 1 lakh rupees unsold goods in our hand. Are you clear? So we called that remaining unsold goods is called closing stock, right? This is the format of the trading account. Okay. Okay. What they asked here, to find the cost of goods sold. Listen, cost of goods sold is not same as sales, or cost of goods sold is not similar as sales. So, do you must know about what is meant by sales and what is meant by the cost of goods sold. Okay, say for example, we have 2 lakhs rupees, 2 lakhs worth of 2 lakhs rupees worth of goods in our hand. Okay, from that we have sold 1 lakh rupees worth of goods. Okay, that 1 lakh rupees worth of goods is meant for cost of goods sold. Are you clear? Okay, what is meant by sales? Actually, you won't sold that 1 lakh rupees worth of goods exactly. We have some profit from that. Okay, so you have sold 1 lakh rupees value of goods with 20,000 extra profit. Okay, so actually you sold goods for 1 lakh 20,000 rupees, right? So you sold for 1 lakh rupees. We called it as cost of goods sold. But listen, how much rupees you sold? 1 lakh rupees. Okay. From that, you earned profit for 20,000 rupees, right? The cost of, listen, the cost of goods sold is 1 lakh rupees with the 20,000 profit, right? With 20,000 rupees profit, you sold goods 1 lakh 20,000 rupees. So 1 lakh 20,000 rupees is called as sales. 1 lakh rupees is sold is called as cost of goods sold. Are you clear? What are the difference between cost of goods sold and the sales? Okay, now we know the difference between cost of goods sold and sales. The cost of goods sold is 1 lakh rupees, and you made sales 1 lakh 20,000 rupees. Okay, here they ask the cost of goods sold. Okay, so for that, what is the formula for the cost of goods sold? Cost of goods sold equal to opening stock plus net purchases. What is meant by net purchases? After subtracting purchases written from the purchases, you will get net purchases, and plus direct expenses minus closing stock. Okay, so as per the trading account formula, we have to add it now. Okay, so the cost of goods sold opening stock, how much rupees? 80,000 rupees, plus purchases 60,000 rupees, plus direct expenses 5,000 rupees, minus closing stock 9,000 rupees. Listen here, they have given direct expenses 6,000 rupees. Listen, sorry, indirect expenses 6,000 rupees. Listen here carefully. Indirect expenses will not appear in the trading account. Indirect expenses will appear on profit and loss account on debit side. Okay, so indirect expense, as per the format of the trading account, indirect expenses will not appear in the trading account. Okay, The indirect expenses do not form the part of the cost of the goods sold. Okay, so let me omit the indirect expenses. So we have to add opening stock 8,000 plus purchases 60,000 plus direct expenses plus 5,000 minus cost closing stock 9,000. So 8,000 plus 60,000 plus 5,000, what we get? We get 73,000. From 73,000 we have to subtract 9,000, we will get 64,000 rupees. This is the cost of goods sold. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.